Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 4th of January, 2024. This is episode 2600. Episode 2600 today. We made it 3 days into the year. I was hoping to make it by the end of last year, but took too many days off, I guess. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what have we got today? The pre-market summary sheet shows that the overall posture right now is mixed. We do have the S&P and the Nasdaq falling off. They've been in balance and they've been selling off since a couple of hours ago, and right now it's kind of a fuzzy situation. The Dow is up. The European markets are up, even though retail in Europe got hammered this morning due to earnings. And overall, we kind of had a mixed bag, and now we're releasing to the downside to continue the trend over the since the beginning of the year. This morning, Walgreens reported. Walgreens, pretty massive, came in at 66 cents versus 61 cents, beat by 8.2% on 36.7 billion for Q1, their Q1. And then ConAgra reported as well, 71 cents versus 68 cents, missed on the revenue number. Those are the only two reports this morning. Yesterday, we had the FOMC minutes at 2 o'clock, as you well know, and they showed several members were expecting rates to stay at current levels longer than anticipated. So, if you recall, I mentioned yesterday that the market had repriced a March rate cut from 100% to 80%. We see yields rising, and now we have the Fed, the minutes telling us that they're really looking for inflation to keep coming down to make any moves. So they say they're going to be numbers driven, and but the market's seeing things a little bit differently. The French and German regional CPIs showed an acceleration in inflation. This was anticipated by the ECB. Not great news there for Europe. The German preliminary CPI year on year was in line. We did get ADP this morning. ADP reported 164,000 jobs for December versus 115,000. If you recall, ADP is a very, very large payroll processing firm, and it releases this number on the same week as the non-farm payroll, which is this Friday, tomorrow. And then finally, U.S. initial claims came in pretty hot as well. Remember, claims was expected at 216 to 225,000, came in at 202. Claims being below the expectation tells us that the market is still pretty hot in terms of employment. At 9:45 today, we get the S&P Global Composite and Services PMIs. At 11, we get crude oil and gasoline inventories. And then at 7:30 p.m., we get the Jibon Bank Services PMI. This is the final number out of Japan, so low importance. But, and that's it. There's not much more to this market currently. It's still relatively quiet. Let's look at the S&P, actually. The S&P is in a balanced profile, very balanced profile. It is testing the extreme low of that balance. We have 195,000 contracts that have traded. The inventory is 51% short, and the range is back to normal at 15 and a quarter. Remember, the last couple of days, 50 points. and 27 points or something yesterday. What was it yesterday? Yesterday it was 25 points. And so things are kind of slowing down a little bit to the downside. Here's what was expected yesterday. This is what we talked about. We talked about the fact that the ES has been making lower highs. It is working itself down into, if you recall, the 46 and a quarter direction of the 46 and a quarter area. This will bring us back to the low of the composite down here. And then yesterday, the expectation, since we're opening below the prior day's range, and the prior day did test the 68 to 65, and the overnight session took out that 68 to 64, and the overnight session took out the 64. The expectation is that we would open, retest into the 76, the value low right here, 75, 76, and then fall off. The expectation is we would fall off and really take out that 46, the 50 and 46, and that brings us into the domain of this weak structure, and then the next key target becomes 47.10. 47.10. That was pretty much the idea behind where we stood yesterday in the auction. And so let's look at it now. Here's what we've got. So this kind of played through yesterday. It didn't go as high as expected. Remember, we're expecting 76. It pushed to 71 or so. Expected 76 on the push higher. So the morning trade, it opened and it tested below. Then we had this push higher, and to me this looked like, after having taken out the overnight low, it looked like the second scenario, which is to now squeeze to 76, then take out the 76, and the 76 becomes a base for us to run towards the settlement price. But immediately came off, found it to be very noisy, and although we did push to the IB, break the IB, pull to the RTH levels to try again, the S&P, despite its lower high and lower low, this product is really balanced at this point. They're finding equilibrium at this 47.50 area. We did try to make a push in the afternoon, so we went neutral again. Another neutral day. As they say, neutral begets neutral. And then it sold off on the close. The sell-off on the close, kind of interesting. It was very, I don't want to say controlled, but it was very kind of methodical on its way down. You could see the overlap, a lot of overlap in these bars. This is a 4-tick Renko. So we ended up settling down here at 47, 46.50. We reopen, we stay above the 46.50, retest, stay above, and then we finally spill in the last couple of hours or so. We finally spill down, but mostly we see that the overnight session was balanced, relatively Gaussian profile, and we have the point of control and VWAP. I mean, the mid and VWAP for the session on top of each other. We're off center with our overnight point of control. Overall, this is behaving like balance. We're not seeing a break that is, this looks like a break that is holding down here, but this is not really an impulse continuation type of thing. We would expect this break from balance to pull back and then continue lower. And what it did is it created a V bottom and is just grinding lower. This is likely to continue to show a contested push lower. But what this does is it starts to put us in this weaker structure down here. So unless the buyers step in early and push us right back into value. In other words, above 50 this morning, we're trading at 45. If we don't push above 50 and hold that 50, then we are very likely to start to move lower. And again, nothing's changed. 47.10 becomes the target below. Okay, so that's what I'll be shooting for. So we still continue the one-time framing down on the daily. We've broken the weekly one-time framing. So the market is rolling over, it's rotating over, and we see it in the options as well. That there's the market's kind of positioned more bearish there as well in the SPX as well as the SPY. So this is where we are. It wouldn't be surprising if today it opens, tests the overnight low at 41.25, which was just one tick below yesterday's low, comes back in, holds steady right in the middle, and we end up with just a market that isn't really committed. And why should it be, given that the non-farm payrolls for December are due on Friday morning? So this wouldn't be surprising to me. We set up balance down here for tomorrow's numbers, and then tomorrow's numbers dictate what's likely to happen next, so what the market's anticipating differently. So that's where the S&P is. The NQ continues to be weaker. The NQ has pushed into the December 13th and December 12th ranges. The NQ finished very weak yesterday, as did the ES. The NQ again having a pretty tight initial balance. The NQ did test into the prior range and fall out, so it ended up doing what was expected. The NQ's next target is way down here, this single print range from about 16,324 till 16,340. That whole range becomes a key target right here. So 340 all the way down to 24 becomes the next key target. The interesting thing about the NQ is it has poor structure higher as well. Now, we just need to watch how it treats the prior day's high. If it gets back in, it's opening at the low end of the range. Would not be surprised if the NQ actually gets back into settlement today. So the NQ looks a little bit different than the ES in that it didn't really have a balanced day yesterday, and it ran away from its point of control and value. And generally, when the market runs away from its point of control and value, there's a high probability that it would snap right back. So the expectation for NQ is a little bit different. The NQ is likely to push lower. It's likely to move into this kind of continue to move into this low range, low volume zone below, but the NQ has a pretty decent chance at turning around and pushing right back to 16,538 and then right back into the point of control that we left behind at 16,550. So 550 would be the upside target for NQ. I'm prepared for either one. Either it continues to slip down the low volume zone here, or more likely today, in my opinion, it tests below, checks to see if there's any interest to sell. If there's no interest to sell, then it's very likely to turn up, pull back, and continue. So let's say it turns up, right? So it tests down, and then suddenly you get these bars that turn up. It's my view on this, my entry on this is going to stock the pullback for exhaustion on the pullback on the way back. I don't sit here and try to anticipate, that it's going to hold some support on the left or whatever. I need to see it happen in the bars. That's a little hint for you there. So that's that. Crude. What did we say about crude yesterday? Do you guys remember what was said about crude despite the selling? What was the biggest thing about crude yesterday? Did I put it on here? I thought I did, and maybe I did not. Yes, boom, there it is. Crude was expected to turn up and push 73 yesterday, right? So it was at 71 when we talked, and there were several reasons for that. Some of the key reasons were that it ran away from the 73 area, but the delta wasn't with it. There were buyers all the way down in crude. Crude is a little bit oversold anyway. And it looked to me like a revisit of 73 would be expected yesterday or today. I talked about this yesterday. You can view yesterday's video to see where we ended up. And we ended up pushing to 72.90 here in the RTH session. Well, no. Yeah, in the RTH session. And then this morning we continued higher. So we're right back. Remember, the expectation is we would likely come right back to the MC volume point of control, which is right in front of you right here at 73.75 or so. So the expectation is it would open and mess around here and then run up. And what did it do? It moved the close and the point of control to the upper end of the range. The expectation is that this auction is incomplete, and so I expect it to continue to explore to the upside. So a high probability trade back into at least a 73 handle, and this morning it got as far as 73.40. 73.75 is the sweet spot for crude. Okay, so it opened at the high. Crude opened at the high print currently. It's 73.40 is the opening print, and so it looks like it is an open drive lower, but I'm not seeing the driving behavior, and the current price is above the mid. So this is very likely to continue to extend higher, in my opinion, today. I'll leave you with that. That's 18 minutes of yippity yappity yappity. I don't have any announcements currently, but hopefully you'll hit the like button and you'll remember to subscribe to the channel to help promote it. Good luck today, and just, trade what you see, not what you anticipate. The market's got to show you what its intent is, and there's plenty of time, in my opinion, to get on the right side of the controlling participants before it actually goes, right? So don't fret trades that you missed, and just make sure you're not trading emotionally or using revenge or tilt. It's a great way to destroy the start of your year. Good luck, and I'll catch you tomorrow morning. Don't forget, non-farm payrolls tomorrow at 8:30 Eastern. Take care.